Hi everyone, Assistant Professor Tanya Hertz here, and we're going to be talking now about the gig economy and the rise in the amount of workers who are actually working in this gig economy. And the gig economy it's essentially a system in which workers, independent contractors, freelancers are working on short-term engagements. They're working as contractors, they're working as consultants, they're working for companies, they're working for individuals, but they're working for themselves as well. So there's been a significant shift in the amount of people who are conducting work this way. There was a recent study done by Intuit, and they predicted that by next year, 2020, 40% of the workforce is going to be working as an independent contractor, as a freelancer in that gig economy. And there are a lot of reasons why, and we can touch on them a little bit in a little bit, but first I want to define some of the terms. When we're saying independent contractor, we're talking about the people who are working for themselves. There's typically a predetermined set amount of time under which they need to accomplish the work. And there are rules associated with who can be paid as an independent contractor rather than an employee. And the general rule is that if someone is to be classified or can be classified as an independent contractor, they must have control over the work themselves. They cannot be managed by the person paying them. They can be told the results of the work. They can be given parameters in terms of how much money needs to be spent on the particular project. But when we're talking about what needs to be done specifically, how it needs to be done, what the person wears, how they go about the work of accomplishing the project, they're no longer considered an independent contractor. Then they would be considered an employee, right? So when someone is an independent contractor, they are working for themselves. They're responsible for all of the debts, all of the losses, and they receive all the profits as well. As a result, they have to pay their own self-employment tax. They have to pay their own income taxes. Now, this is a little different than a freelance worker, although we use the terms for the most part interchangeably. There is a difference though. Freelancers technically are working on many projects at one time and for multiple people or organizations, where independent contractors are typically working on one job or one project at a time. But other than that, all the rules are the same. They're both working in that gig economy, and some of them are doing it by choice, and others are doing it because they have to. They don't have any other choice. They might have lost their jobs. Those are the reluctant entrepreneurs. Or maybe they don't have a social security number so they can legally work here in the United States. But even people who don't have a legal right to work as an employee in the US do have a legal right to work as an independent contractor, and they do this by using an ITIN, which is an individual taxpayer identification number. And this allows people to apply for a bank account, an interest-bearing bank account, to conduct business, to report their earnings and pay taxes to the IRS. And you can see why the IRS doesn't care if you're a citizen or a non-citizen. They still want taxes filed, and they want their cut, right? And so I want you to think about this a little bit. Would you consider an independent contractor or freelancer an entrepreneur? And are those terms of independent contractor, freelancer, are those legal forms of business ownership? So the answer to those questions are yes, they are entrepreneurs. And why is that? Because they have ownership. Remember, that was the key defining factor that differentiated an entrepreneur from an employee, was the ownership. And are they legal forms of business ownership? Well, think back. We talked just tonight about the 4 forms of legal business ownership, and independent contractor and freelance worker, those weren't in those 4 primary types of legal ownership. So no, they're not legal ownership forms. They are more how the business is organized, not the structure, the legal structure. So what do we actually classify them in? What do we classify the legal ownership of independent contractors? Well, it could be anything, could be a sole proprietorship or corporation or LLC, but the vast majority, over 90% of them, are classified as sole proprietorships. So the thing to remember, though, is that they are not employees. They are not employees, and so no payroll taxes come out of their payments. They have to pay their own taxes, and they may use many different ways to pay their taxes. They could, if they have a social security number, pay it that way, ITIN for immigrants, or maybe through their EIN. So an EIN, we haven't said this yet, is the employment identification number. Now, this is the unique number that businesses get to differentiate themselves, to say, this is a business, not a human person. And it's a tool that the IRS uses to say, where's the money coming from, and who this is, and to sort of give a personality or a designation to a business that they understand in the format that they understand. And that's what it's used for, to report taxes. But that's not the only thing that it's used for. It's also required if we want to open a bank account. Certain legal forms of business ownership, you must have an EIN. Corporation, LLC must have an EIN. Partnerships must have an EIN. Sole proprietorship doesn't necessarily have to, but often they do. And the reason why they do, why is it so recommended that they do? Well, because it's better to keep things separate. It's better not to commingle our personal assets with our business assets, even if the business entity and the personal identity do commingle in sole proprietorship. So it also helps us to pay our employees. It helps us to pay our taxes. It helps us to hire employees. It helps us to sell a business. It's very difficult to sell a business if all of the funds are commingled. So everyone should get an EIN, and anyone can. Now, when we're paying taxes, it's different as a gig worker. Then we would pay them as an employee, for example, and typically those gig workers, they receive their 1099s from the payer, the client, whether that's an individual or an organization. They receive it every year at the end of the year, as long as they did more than, at least $600 that particular year. And that's how they pay their taxes. And a lot of people, the reason why they become these gig workers, the reason why they have these secondary jobs is, I shouldn't have said secondary, because not all of them are secondary. For a lot of entrepreneurs, this is their sole source of income, but a lot of them is secondary income. And it's because of the tax advantages. So how do you pay taxes as a gig worker? Well, you report the amount of money that you made, your profit or your losses, and you get to write off, you get to deduct any of the business expenses from those earnings. And that's a big advantage for some people. So how you're filing makes a big difference in how much taxes you pay. So if you're single or married or filing jointly or separately, or any of the things that go into filing taxes determines the amount. And whether or not you're operating a business out of your maybe home or just a business in general can really reduce your overall tax obligation. So a lot of entrepreneurs, a lot of gig workers are engaged in tax avoidance, legally minimizing their taxes, legitimate tax deductions. Oftentimes they're both, expenses are both personal and business, but that they get to write those off. They get to deduct those legally. That's tax avoidance. I just want to make sure that everybody understands I'm not advocating for tax evasion, which is illegal, which is just simply not paying taxes or writing off things that should be considered personal as business. That's wrong. But it's totally legal, legitimate, understandable. In fact, it's smart to pay the least amount of taxes that you can legally pay. And so if you start a small business out of your home, for example, then you can write off or deduct your a large portion of the expense of your rent or your mortgage. You can write off part of your electric bill. You can write off anything that's used for business. You could write it off, even that if that's just selling things on on Etsy or on one of the websites, right? So that's why a lot of people do it. That's why they work as gig workers in that gig economy. So that's that. I think we'll leave that there. I will see you all in class soon. I appreciate, I don't know what I'm saying here. I'll see you all later. Bye.